Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we had the pleasure of interviewing the silver guru, David Morgan of the Morgan Report. How you doing today, David?
Daryl, I'm well, and thanks for having me back.
Yes, indeed. Yes, indeed. And so I want to start all things silver. Okay. So I'm curious in your perspective on a macro level, historical level, or whatnot. What are we experiencing with silver right now?
Well, we're experienced with both silver and gold, but silver of late, where the shift between why silver is being priced the way it is versus where it was being priced in the previous 2 decades. So specifically, silver is now acting as a monetary asset, a safe haven, a store of value. And it's always had those attributes. Anyone that's a silver stacker probably believes in those 3 statements. But the market's price has not reflected that. Now it does. So let me explain a bit further, Daryl. If you look at silver and gold from the bull market starting in the year 2000, roughly, both those metals sold above their all-in sustaining costs or their production costs with a margin. In other words, $1,800 gold to mine it, selling at $2,000 per ounce. Silver, $25 to mine it, selling at $28 an ounce. Now, there were a few excursions beyond those modest margins, but they were temporary. They went up really quickly, stalled out, and back down. So for the most of the last 25 years, both the metals have been priced basically as commodities, like a wheat or corn or soybean oil. What does it cost to produce it, and what's a modest margin to make a profit? However, now they're looking as money and money alone, meaning there's an infinite demand for real money, especially when the currency crisis continues onward, meaning that even the stalwarts in in Wall Street are saying, you should readjust your portfolio weighting from, 60-40, for example, from bonds to stocks to 60-20-20, bonds, stocks, and 20% gold. I mean, you'd only hear those kind of things at the Vancouver Resource Investment Conference or on Kitco, or maybe, but now Wall Street's coming on board and telling people outright, we trust gold as much as we trust the treasury market. So now that the monetary function has come into the pricing mechanism, I won't say the sky's the limit, but obviously the momentum is there. And being the last leg of this market, in my estimation, that's where we get the greatest price appreciation in the least amount of time. So people that were, reluctant to come into the precious metals, that are coming on board, quote unquote, late, they may come in at, $45 silver and get out at $90 silver a year from now and double their money, where people that, waited years, that bought it at 30, waited, a decade or more to get back to break even. So we're in that kind of a market, and I really think that it's not going to last a long time, but it's going to be very, very worthwhile for precious metals investors.
Gotcha. Thank you for sharing that. So you mentioned that now it's becoming more in the spotlight as a monetary metal. So I'm curious in your perspective on the industrial side, as that's been catching a lot of headlines, added as a critical mineral to the critical minerals list by the Trump administration. And we're seeing that the demand for solar and many other industries that are needing this metal as a conductor of electricity, and that's coming into competition with investment demand, which typically may be for monetary reasons and such. And so just curious in your perspective on how that plays into the equation.
Quite heavily, Daryl. I mean, I've thought and spoken about this in the past. So we have almost insatiable demand for silver on the industrial side alone. If you look at Matt Watson's works, which I have shared with other interviewers, you see that according to him, the industrial demand alone is basically eating up all of the available mining and recycling in a given year. So anything above and beyond that, that's investment demand, has to come from above ground stocks. And we know, according to Metals Focus, the Silver Institute, BMO, and others, that we've been in a running deficit for at least 4 years. So supply and demand balances by taking the above ground supply and moving it into the industrial side and or the investment side. So now you have that aspect that I've discussed before, where we have a demand of an industry that doesn't go away and continues to increase year over year. Not that we couldn't have a slump year, and an investment demand where the paradigm has shifted, where I must have some protection against the devaluation of the dollar. I understand now its true purpose or its highest function is preservation of wealth. So you have those two categories that are increasing. You're going to see maybe kind of a Shark Tank situation where the sharks are after the same piece of meat, but both need it. One needs it for industry, one needs it for monetary protection. So they bid the price higher and higher. And on the industrial side, most of it's price inelastic because so little is used in the end product that the people looking to buy it aren't thinking in terms of how much does it cost me. They're thinking of how many ounces do I need to stay in business. And that's a whole different shift in how you think about the silver market. It's like if I need X million ounces to keep in business, and it looks like we got a delay on our last shipment by a month, I don't want that to happen again. I want you, Daryl, to go out and get me 2 years worth of silver. And I don't care if you have to find a warehouse to store it in or buy a warehouse. I want to have that much peace of mind that we're not going out of business for lack of supply. So once that fits into the equation, that will put the price higher. And then, of course, the monetary demand continues. So people go, geez, I never thought silver would get over 50. It's at 60 now. It must be going to 100. Maybe I better buy some.
Mm-hmm. Yeah, for sure. I could definitely see that. So recently there was some issues with the CME, and there's been a lot of, I don't know if this is proven or not, so I'm just going to say speculation,
Right.
that there was, I remember the day after Thanksgiving, the futures market had closed, and it would show the price of silver, and folks were referring to the Shanghai exchange and such. And then there was much concern about the manipulation of silver and these paper contracts connected to the metal being exposed, and them needing to position themselves to avoid being liquidated or whatever the case may be. So I'm just curious if you have any thoughts on that dynamic within this, because I know that, a while ago, JP Morgan, they got caught for like spoofing the metals prices and such. And then now we're at the point where the industrial demand is significant. The investment demand is significant. It's a critical mineral, all of those things. And so I'm wondering, like, if that's a dynamic that's still at play, or if it's like, or are these paper contracts and futures traders and such, are they in trouble?
Yeah, great question, Daryl. So let's attack them one at a time. I've seen a lot of recent commentary recently about the CME, cooling system failure, the power backup failure, and just a couple of weeks ago. And some silver contracts were settled in cash rather than being delivered. But I was unable to locate any credible public evidence confirming that claim. In short, I did not find any credible source documents of a cash settlement in silver futures at the time of the outage. And what I did find remains unverified, but none of the media articles, exchange statements, or technical postmortems reference any forced cash settlement of silver futures contracts. And I'll stop there for a minute because they're a friend of mine on LinkedIn, and I really think he's a credible source. We've had conversations back and forth for a few years, and he did make that claim. And I asked him for evidence of it, and unfortunately, I haven't received it back one way or the other. So, but again, at best of my ability, rather than the default, the banksters pulled the plug. It was reported that the CMS shutdown was due to a cooling issue. Many of us think that's suspect. There's redundancy in those systems. There's a secondary, probably tertiary backup. So that sounds a bit fishy. Nonetheless, that's what they said happened. But as far as them actually forcing a cash settlement, I've been unable to prove that. But certainly it is a possibility. So the conclusion I've come to is I'm skeptical whether something actually took place on that. But yet we know from the rules of the road, the CME itself, that you can be forced to cash settle. So I'm open-minded. If I find evidence to the contrary, I'll certainly report that. Probably public. I will do publicly. But right now, I have to be, as straightforward as I possibly can be. I haven't found the evidence of it. As far as the second part of the question, the spoofing and all that goes on, that's been proven so many times. I wrote an article on X, actually. I might have posted on LinkedIn as well, about all of the times there's been court findings where there's been malfeasance, there's been, ill intent to drive the price a certain direction, and penalties have been paid and people have gone to jail. So to say that the market isn't manipulated is really a semantics game. The word manipulated doesn't come in the court order, but the word spoofing does. So let's be honest, spoofing's manipulation, pure and simple. So from that aspect, I'm pretty solid. I don't think it's ever going to go away, but it's less effective as it's ever been. There's been times where as the vernacular is, Mr. Slammy, a lot of orders to sell silver on paper enters the market, which is an overwhelmingly large amount, Daryl, and it drives the price down. But it takes more and more of that to get the price to move as much. In other words, it might have taken X to move the price $1. Now it takes 3X to move the price down $1. So that means that the shorts are really having a more difficult time to slam the market down.
Mm-hmm. So thinking about the shorts, I mean, obviously, they're doing it to make money. But would you say like now's a more risky time to be trying to, manipulate this market because of like the amount of demand and pressure and momentum that is working against it, that positioning?
Yeah, absolutely. And before I go into that detail, I do want to state that some of the derivatives market is totally legitimate. I mean, not every bank is out there to, short the market and, take advantage of less sophisticated investors. Does that happen? Yes. It happens all the commodities. So, it's a broad brush here that, people get the idea that like the investment banks or the bullion banks are totally manipulating, every tick of the market. That's really not true. But from time to time, it does move the market. But as far as what you said, Daryl, I think that's the most important question you can ask in this interview. We're now in a position where the 1,000-ounce bar, the commercial bar market, has taken precedence over the derivatives. And that's what I've said for years. When the physical market takes the authority to determine the price of silver, we have a real market. And that's what's been exhibited here in the last few months. And I think it will continue. But I also think that there's enough power in the derivatives realm that you could see a big slam down. For example, Daryl, if all of the shortage in physical metal is delivered to LME, so now they've got the metal they need to make good on any contract in a buffer. Let's say they've got 2 or 3 months worth of physical under the worst conditions to cover their position. And that's true for the COMEX. And let's say it's true for the Shanghai. So they're all loaded up on physical silver. You, at that point, you were the infamous they could come in, use the derivative market, and push the price down because there would be enough, physical metal to deliver. But we're not there yet. And I'm not sure we're going to get there. We could be in a position now where the monetary demand and industrial demand, as I said earlier, is so strong that they compound on each other, and the exchanges aren't really able to catch up in time, where they're really sweating how much the delivery is demanded from their counterparties. And it becomes a very difficult proposition for them to stay ahead of the game. And I think are there or were there. And again, I'm open-minded enough to think it could be quelled for a while, but I just don't know at this point.
Circa 2020, we pivoted the entire company, turned on its head, brought in new management, George B., our CEO, who's built gold mines all over the planet, and we focused in on CK, copper cake. It was not reliant on drill holes and discoveries. We can go through this process, engineering, permitting, get towards a development stage asset. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
I'm curious, like, how volatile can this get? So obviously silver's up significantly on the year. And if you have the industrial demand for silver, monetary demand and such is up significantly, many folks are predicting triple digit silver. Like silver has been the cheapest, metal based on its value and its utility. Compared to many other metals and as scarcity as well, and it being a byproduct. And so I'm just kind of wondering, like, how volatile this can get. I'm imagining a world of triple digit silver. What would that mean for like these industries that need it, the governments that need it, and such, and then even the investment demand? And I'm kind of wondering, if you have any perspective on how volatile could this get?
Very volatile, extremely so. I mean, first of all, if you look at the need as a critical mineral. So the United States says we need a stockpile of 100 million ounces. 100 million ounces is 10% of the annual supply. So that's a pretty good whack. And then you have the 401k change in America, where these retirement funds can, for the first time ever, invest in commodities. So that a certain percentage of the 401k investment holders are going to move into gold and silver. So that's going to put increased pressure on it. And then you start to see more and more, let's say, nation states come into the silver market, which is kind of unusual. India has always been there. It's increasing their position, and that's one to pay attention to, of course. But Russia's also holding it as a reserve asset. Saudi Arabia has put 1 million shares in the SLV, and you keep seeing there's more and more clout coming from the Shanghai Gold Exchange, moving metals through Hong Kong, and I think they're putting up another couple of depositories that will also play into the physical demand for the metal. So there's a lot of synergies coming through government demand, industry demand, investment demand, and also location of the metal, where who has the metal in inventory to meet the physical demand has ebbed and flowed. We saw a lot of metal come from London back into the New York market, and from the New York market back into the London market. In the meantime, the Shanghai market is really being depleted, and they'll probably need to restock. So very tight, which that tightness implies added volatility going forward.
Yeah, thanks for sharing that, David. And so I've been kind of curious about confiscation. So when we look at like when gold was confiscated in the 30s, it was set to stabilize the monetary system and such, and the currency. So I'm wondering about silver being added to this critical minerals list, if there's a potential for that, because it's a critical mineral and there's not much of it. It's scarce. It's a byproduct. And, then you have these industry demands, and then now you're saying like, hey, the government actually needs this metal. And so it's not as abundant as some of the other minerals, as people say, like rare earths aren't necessarily rare. But, when you look at refinement and such, like, okay, that's another story. But just kind of wondering if this could be a possibility for silver.
I couldn't rule out the possibility, Daryl. I mean, the possibility does exist. I mean, let's say that, the war effort escalates from where it's already at, and silver being a critical mineral for military purposes, the demand gets to where, they want to, I'll say, quote unquote, confiscate, but they demand it. And that could happen. I don't put that out very highly that it's going to, but again, I wouldn't rule out the possibility. So how would that take effect? I think it'd be different than in the 30s. Basically, it was nationalized. Government paid the going rate for gold until they got as much as they possibly could garner from the population under the threat of jail time and or a fine. I think this time the world's a little more sophisticated, and most people that stack metals are not are a little bit questioning of the authority of the government overall. And because of that, I think that the best way to take place would be to put in a proposal for anyone that's willing to give up their silver. And I think there'd be a minimum amount. Like, I don't know what it'd be, 1,000 ounces, probably minimum, or maybe 5,000 ounces. But anyone that's willing to put up their silver for the effort, the strategic minerals effort, is tax exempt. And that's good for the next 90 days. I think that would be the only way you probably get the private investors to come forth with their metal. If they're going to just take it from them, that's extremely difficult. It's illegal. There'd be legal battles. There'd be, senators, Congress critters, and legals all over that proposition. They could take it out of the ETFs, which would probably be the first thing that they would do. They'd probably leave the public alone. But even in that case, they'd have to build a pretty strong case to be able to do it. So, again, I don't rule it out. I don't worry about it too much. However, I'd be remiss in my, thinking if I said, oh, no, it never happened, impossible, couldn't take place. No, there's a possibility.
Yeah. Yeah, I haven't, I know a little bit about the 30s confiscation, and I was kind of curious, like, how did that even happen when, you have gold and silver as money in the Constitution?
Right, exactly.
And such, so I was kind of wondering, like, how did that
they closed all the banks. They closed all the banks. And then they had this order come out and basically said, you got to turn in your gold for paper. And then they reopened the banks. Some of those banks never reopened. So there were like farmers in the 30s that had enough money in their account in a bank to pay off their loan and not get their farm taken from them for lack of paying the debt. So in other words, I had, I don't know, in those days, 40,000 in the bank. I owed 30,000 on my farm. They closed my bank, and now the bank's gone and my money's gone. And I'm getting my farm taken because I can't service the debt, even though I had the money to pay it off. Now, that's not every example, but there were cases like that. So it's very disheartening what happened at that time frame. Most people don't have the full story of the way it favored the banking institutions versus the common man. And it's not a pretty picture.
Yeah, for sure. So earlier we talked about the deficit. Silver Institute has put out their numbers and their projections, and I think the projection this year is not as much as a deficit as the prior years, but it's still going to be a deficit. I'm curious in your perspective on, there's many different companies that have been coming forth to raise capital for their projects and their mines and such. I know Visa Silver just recently did one. We also had First Majestic just put out to raise some money as well to get these, to fund these projects and to, get the silver out of the ground. And so just curious if, oftentimes when that's been happening in the recent environment, like the share prices are bouncing back significantly, like people were buying the dips on that. And so just curious if you have any thoughts around, the efforts to get more silver out of the ground. Like, obviously they're raising money to get more silver out of the ground. Do you think at some point we're going to be at a surplus again, or what's kind of your perspective there?
Yeah, well, in a high price environment, these companies are smart, and silver mining in general is a tough business. Silver mining in particular, because you're competing against 70% of the market that brings it up as a byproduct and don't care about the price of silver. Copper miner could care less what the price of silver is, or a zinc miner, a lead miner, even gold miner. So they look at it as like an accounting adjustment. So they price it at like zero. Not really, but they use an accounting adjustment. Mm-hmm. So that's kind of against you. If you're building widgets and there's someone that builds widgets because they build something else, and they get that widget for more or less for free just by manufacturing another product, they don't value it very highly. So there's that part of it. But continue on with your question, Daryl. Now they're smart. They know when to raise money is when the price is high. They don't have to see an extremely high price. They know their margins are like 2x. I mean, the worst silver producer right now is probably mining all-in sustaining costs plus tax liability is about $30 the ounce, and we're at 60. So that's one heck of a margin. And so now it's a good time to raise money to expand their project, maybe drill out a part that they know they've got an ore body and put it through the mill. In other words, increase the flow rate from X tons per day to 1.5X tons per day. So all of that's taken into play, and it's the right time to do it. You want to refinance or build financing when the price is favorable to your project. And that's exactly what's happening. And we'll see more of it. We'll also see more M&As. We'll see where larger companies, some like you mentioned, will take over projects that have legitimate assets in the ground, pay premium for them in most cases. But the real frenzy hasn't happened yet. The miners are still undervalued relative to the metal, so that's the best place to invest right now. Secondly, when things get overheated, you'll see a lot of these junior miners will get bid up substantially because they're very small floats. They're very cheap. People love cheap stocks. You'll see that, 13-cent silver stock. And oh my goodness, look at this. Silver, and a lot of people don't know the difference between an exploration project and a mine because a lot of the projects have mining in their name. It's XYZ mining. Well, it's XYZ exploration, but they don't care. They just see that silver's in the name. It's got a great story behind it. It's cheap. I'm going to buy it. We haven't hit that much momentum yet, but we're starting to see that a lot of the juniors, and most of them, by the way, I'll be fair, are merit. Without the junior mining industry, there wouldn't be mining. I mean, big companies don't really risk the capital to go out and explore. They let someone else risk the capital, the public basically, to go out and fund these companies. So probably said enough on that, Daryl. It's an important part of the industry, but it's also the trickiest part of the industry, the explorers.
Yeah, that's a good point. You mentioned if silver's in the name, if we're in a real frenzy, folks are going to just buy it because silver's in the name. And we look at, what's been happening recently with the AI bubble, anything with AI or any deal with ChatGPT or whatever the case may be, those stocks were catching a bid. And so, or it was quantum computing recently as well. And so it's interesting that we haven't seen that in this particular market yet. So which tells that, we're still in the early innings. So on that note, I'm curious about, so there's the saying, high prices cures high prices. And so obviously you have these companies raising capital to produce more or to, find more projects or find more metal in the ground to be able to sell to a producer or whatnot. Do you see this gap on the amount that's produced and recycled versus the demand? Do you see that being filled at any point in the near future, or do you think that's a long ways off?
I think it's a long ways off. I mean, they base that primarily on what the Silver Institute publishes, and also this friend of mine, Matt Watson, that I referred to earlier, I think, and the demand for silver exceeds the recycling and mining from Matt's work, for the next 25 years. 2025 to 2050, according to his graph, we cannot meet the demand even with new mines coming on board. Now, whether or not that's true or not, I don't know, neither does he. But his projection is that fact, Daryl, that the demand continues to increase over, most of the industries that we know about, semiconductors, photovoltaics, electronics, AI, data centers, increased power demands. All those things continue to increase in demand for silver. And then the monetary demand will continue to expand, in my view, which he doesn't take into account. Matt looks at it as a constant 200 million ounces a year investment demand for the next 25 years. I beg to differ. I think you're going to see some years where people and entities like the ETFs in India, for example, demand more silver just to make good on their shares. And the demand could go very, very extreme. I'll just back up for a second and give it back to you, Daryl. But in the year 2020 or 2021, I forget, I think it's 2021, the amount of silver investment demand was 520 million ounces. which is more than half the total silver supply. And that came primarily through the ETFs. I think it came from Guggenheim Investments, Scott Meanard, because Meanard had mentioned that silver was his go-to investment in 2020, and he might have taken action in 2021. I don't know. The man is deceased now. But that was the biggest push into silver from an investment standpoint ever. And after his demise, the amount of silver in the investment side on the institutions has waned quite a bit. It's starting to pick up again now, but that was 1 year. So you had a couple of years like that where a couple of pension funds, family offices, sovereign wealth funds, nation states, India, China, Saudi Arabia say, hey, we want silver. The silver market, as you said, is so small and mispriced still, in my opinion, that you can see a huge demand come in literally in 6 months to a year's time. That would definitely tilt the scales, because that kind of demand physically would definitely put on more pressure than we've already seen.
Got it. Okay. All right. So earlier you mentioned that the miners that are focused on other metals, copper, zinc, gold, oftentimes they don't really care about what the price of silver is. Do you think that's going to change at some point? Because I know that some of the royalty and streaming companies, they will lock in a contract on the silver that's produced as a byproduct from those mines that primarily produce gold, copper and other minerals. Do you think they may wise up at some point and hey, we actually got, even though this isn't our focus, we actually got something that's valuable, and that may put them in a stronger negotiation position?
I do. That's a great question. I don't think I've ever been asked that before, Daryl. But so I took a look. It's been years ago. So the idea is correct. I don't know if the number's even close to, well, I'm sure they're close to correct. So I looked at two of the biggest ones, RTZ, Rio Tinto, and BHP, Broken Hill, Millington, and they mine a lot of silver, but it's very minuscule relative to their other mining activities. So at the time, I think silver was somewhere around 17. So I doubled the price of silver to see what effect it would have on their bottom line. And I went from 2% to 2.5%. It didn't really make much of a difference. So for those big conglomerates, I don't think it would. However, there's some, let's say, medium copper mines out there that have a pretty good silver component. And if silver got to a level, I don't know what the level is, it would vary mine to mine. Let's say that silver made up 35-40% of their balance sheet and 60% is copper. Their chief financial officer would be taking a hard look at that and saying, hey, we're not just a copper company anymore. We're a copper silver company now. And we need to hedge our silver position, or we need to sell it forward, or that contract that, I'll just say it, Wheaton Precious Metals offered us to offtake our silver. We're not signing that contract. It's too valuable. We think it's going higher. We want to, we're going to negotiate back to them. This is what we want for our silver, whatever. So certainly that could happen. I don't think, again, it would happen in these huge conglomerates because they mine so much other material relative to how much silver they mine. But in some instances that I just outlined, I think it would, or it could, I should say, make a difference. Wait a minute, we're a gold mine, but silver's now, 1/30th the price. Look at the gold silver ratio of gold. And we get this much silver. We shouldn't, go into any more streaming agreements. We should start hedging our silver position or whatever. So certainly that exists. It's a great question. No one's asked me that before.
Yeah. I guess my brain's working fine today. So curious in your thoughts on what's happening in India. I hear India's name brought up with silver. I've heard Russia's name. I've heard China's name. And so just curious if you have any overall thoughts on what's happening in the East with the silver market or the silver metal in general.
Sure. Well, first of all, India has a very rich history of being silver dominant. And if you go back, when I started looking at the metals, which was, in my 20s, I'm well beyond that now. India, really, the common people would buy silver for wealth preservation or for savings, and usually the women wore it on them. Bracelets and necklaces, mostly bracelets, but other artwork in silver. And then silver started kind of being displaced by gold because India became more and more wealthy as we hit more and more of the technological age where, a lot of the software writing was done by people in India, a lot of the phone answering services in India. So a lot of the basic people in India, the average cost of living was good, and they were moving up the scale, so to speak, where they were wealthier and wealthier. And as that happened, many of them switched to gold over silver. That's kind of reversed again because silver has become so undervalued relative to gold, and they have such a rich history in silver. And now that they do have money to expend, the people of your generation are looking at, well, I don't hold on to this, all this bulky silver. And, grandma wears the silver, bracelets, but I'm not really interested. My wife isn't that interested in it, but they develop an ETF, which is a very powerful form of buying physical silver. They're more sophisticated. They understand how it works. So you have that in India. So the story for silver in India is getting better and better all the time. As far as Russia's used it as a strategic resource, they keep their mouth quiet. We really don't know how much they bought. They tell us, but we don't really know if that's an accurate number. And then the Chinese have now, I think it's January 1st, they've got a change in their export of silver, basically keeping the silver in-house and in the nation state. And then, of course, what's going on with the Shanghai Gold Exchange and the other exchanges in China, moving, through other warehouses in Hong Kong and other places, where I think that's a shift. I think the big shift for the big picture, Daryl, is that you're going to see dominance moving from the price and availability of silver moving from west to east. I don't think the dominance is going to remain in New York and London. I think it's going to shift to the east. It's not going to be a week from Tuesday. It's not going to be next year. It may not be within 3 years. But I'd say 5 to 10 years out, you may see the dominant player setting the price mechanism for silver and gold coming out of the east, not out of the west.
Got it. Okay. Yeah, that's really helpful to understand, especially about India's history and the gold silver ratio. And before folks would buy silver, then that ratio comes down. Then they convert it into gold, and then now that the gold is up and they've accumulated a lot of wealth, now you have folks buying silver again. They're like, okay, silver's the undervalued asset, and it just shows like these cycles of history. Very interesting. So as we wrap up today, I'm just curious if there's anything that has surprised you so far in this recent market move or any dynamics that have been developing. And just curious if you've because I know you've been calling for higher silver prices for a while and you're starting to see that play out. I know sometimes folks would give you, ask you for a date and a prediction and such, and you're like, oh, maybe by year end. And it's hard to predict that, right? But now we're seeing those dynamics actually come to fruition. And so just curious if there's anything that's surprised you in the market so far, and then if you have any general ideas on what your expectation is for next year.
Well, I do think we're going to see higher prices, over the next few years. How high, I don't know. And I guess for the surprise, it's a surprise and it's not. But what happened here recently, we talked about at the beginning of the show, where we saw this outage, this occurrence that happened in the CME, where they had this coolant power failure thing. I mean, surprise, yeah. I mean, did anyone expect the facility to be shut down for 10 or 11 hours? The answer is absolutely not. But it's still...
This is the first time in your history where time in your knowledge...
happened before. I mean, not that specific thing, but where they've halted a market or they changed the rules or... Okay. Delivered a failure, but they covered it up with paper or whatever. So that is somewhat of a surprise, but then on the other hand, not. I know I'm contradicting myself, but it's like, don't be surprised by anything in the silver market. I mean, darn near anything you can imagine can happen. And that was another one of those. Really? 10 hours? Okay.
Yeah. Are you surprised CNBC did a piece on silver? I think it was CNBC International. I don't know if you were aware of
I
that.
am and I'm not. I mean, for me, they ignore it. I mean, they put the price up. They usually talk about gold for a few minutes. Gold is up today. Usually like to emphasize when the price is down. Gold is off, $45 a day. It's like, blah, 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 blah. Silver, they hardly ever mention other than just the price. But I do look for when the mainstream media or mainstream financial media starts talking silver, gold as well, frequently, then that's usually an indication that the market's getting saturated. It might be time to start taking some profits. And so I wouldn't say from that one CNBC piece that means anything really, other than awareness. And then, of course, if you put on a aluminum foil hat, you might say, well, it's the insiders tipping each other off that, hey, you got to start looking at the silver market as an investment. I don't really go down that road, but you could.
Yeah.
There are people that think that way. I don't really know, but just to see it out in the public domain like that, where it's mentioned, and it hasn't been really for years. I mean, I've been on some of the main financial channels in the past. I was on Yahoo Finance a fair amount, and BNN, and some of the CNBC, MSNBC. Anyway, Fox. But I haven't been asked back, and that's fine. I mean, it's not about me; it's about the message. But I find it interesting to start to hear more about it in the public domain.
Yeah. It's interesting. They put together like a 10, 12-minute little mini documentary on it. I was like, oh, okay, that took a lot of time and attention to do that. So it was kind of interesting. Well, David, appreciate you coming on the show. Where can people connect with you and read some of your work, your publications, and all of that?
Daryl, it's good to be with you again. TheMorganReport.com is the main website. A shout out for my documentary. It is finished and published in late October last year. This year. Already thinking ahead. SilverSunrise.tv. You can go and watch that documentary for free. I like the feedback. We left the comments open. And then as far as the website, TheMorganReport.com, sign up for our free email. We have a paid and a free service. And on top of that, the blog is always available. You just click the blog icon and you can go in, and I don't know how many there are, like 1,700 different interviews, writings, lectures, videos, audios, everything else. So put a lot of educational material out there for free for the public to understand the monetary process, the system we're under, and how precious metals and other resources are very important in this day and age.
Yeah, for sure. Well, you all got it. Be sure to go check it out. Check out Sunrise TV so that you can check that documentary out. Love to see some audience participation and feedback on it. So I remember you had shared with me earlier this year that it was in the production phases and such. And so definitely excited for me to go watch it as well. So you all be sure to hit the subscribe button if you haven't subscribed yet. Love to have your support. Also click the link that's pinned in the comments. That is to the Vancouver Resource Investment Conference. I will be there speaking as well as meeting some of you in person. So we'd love to see you and meet you in person. So thank you, David, for coming on the show, and look forward to having you back.
Thank you, Daryl.